Okay, ladies and gentlemen, let's get back into another Bitcoin video. Today we have the Bitcoin charts, the technical analysis in the first half of this video, and then the second half we'll be diving into the events coming up this week. Within 5 days we have FOMC, we have CPI, and also we need to discuss briefly the authoritarian policy being announced in Australia, Canada, the UK, and also the Binance versus SEC case. I don't want to get too much into that kind of stuff because it is kind of risky to talk about on a platform such as YouTube. Unfortunately, that's just how it is. So I will briefly brush over it and try to get the main points across without diving into it too much. So just know that I'm centering myself to a certain extent on those topics. But TA guys, this is what we're here for at the end of the day. This is technical analysis. We know for a fact that charts reflect price action. Charts reflect price action. They also reflect fundamental events. They also reflect news. So when you see news, and this is a very important point that many people actually don't understand, surprisingly, because it's very simple. When you see news occur, okay, it's priced into the charts. So the charts reflect what happens in the news. And this is why charts are much more important than that of the news. You can read the news all day, but at the end of the day, the chart's going to give you the best idea of where the price is going because the charts form patterns based on what happens in the news, guys. Very important stuff. And a lot of people don't understand that. Charts are the main thing. Charts are important. I could honestly go and do my job as I do on a daily basis and make money just by looking at the charts, never opening the news once. I could still make money because it's not important. The news is interesting, okay, and sometimes it does hold a degree of relevancy and does hold a degree of importance, and it is very useful predicting the future to a certain extent, but it's not actually important. What's important is charts. So let's start off charts with that said. What's going on with charts? As I said, 3 months in the same range, 3 months between 25k roughly and around 31k. Boring stuff. And during this period of boringness, we've seen the volume on Bitcoin. This is the monthly spot volume on all the major exchanges, okay? We've seen it reach the lowest level. It's not actually shown in this chart here, but it is true. The lowest level we've seen in volume since, I believe, March 2019. For 4 years, 4 years and 2 months, we have not seen volume this low. Insane low levels of volume, but it makes sense. Look when the volume started to decline. It started to decline over here in March. What happened in March, guys? In March, we entered the range we're in now. That is when the volatility started to die down. When we reached the peak in March, after this big move for the upside in Q1, that is when the volume started to decrease. Now, what do we know about TA in terms of volume? We know that when volume is descending and you are in a downwards trend, that means the downwards trend is weak. Because what it means, guys, is that the price is going down. Yes, the sellers are winning, the bears are winning, the price is going down, but the volume's also going down at the same time. So you're seeing basically, yeah, the price is going down, but no one is being convinced to sell. There's being less and less sellers as the price goes down and down and down, which means the trend is weakening. So yes, we are in a downwards trend, but we're also seeing massively decreasing volume in the downwards trend on a macro scale, meaning the downwards trend is actually weak. And this is why, it's all connected, guys. This is why a descending wedge formation has formed, because a descending wedge formation is the definition, okay, of a bullish downwards trend. It's where you see, all right, lower highs and lower lows, but ultimately it's in a good way because you're seeing a pattern of continuation. So you usually enter a descending wedge from the downside. Okay, you usually enter from over here and you usually go downwards and then you break through to the upside. It's a continuation pattern. That's exactly what we're seeing here. So to say that the price charts on Bitcoin in terms of daily chart is bearish is completely asinine. It's not true. It's not based in reality. The fact of the matter is the daily chart is actually in a very good position, and this is supported quite well by the weekly chart. If we're looking at the weekly chart, we can see we're above the Gaussian channel center line. The Gaussian channel center line has historically been incredibly accurate. Once we move through the Gaussian channel center line, we generally move through in the direction of the break. If we move up into the Gaussian channel, okay, move down into the Gaussian channel, we generally move through. Up, we generally move through. That's happened 6 or 7 times without fail, and we have, guess what, guys? We've moved up into the Gaussian channel, which means if we're following the historical trends, we should be moving through it and to the upside, which is supported by the fact we have the descending wedge on the daily chart. I am not bearish at all on Bitcoin on medium-term time frame. I'm actually not. As I've said before, the one thing I am concerned about Bitcoin is the monthly chart. This is literally the one thing I'm concerned about. The monthly chart doesn't look good. The monthly chart, we've seen a rejection from the red resistance line at around 29k, as you can see. That resistance line symbolizes the same formations we've had in both previous bear markets, and it's not good to see that we're rejecting from it, but that's the only thing, right? The monthly chart's bearish. I can say that very, wholeheartedly. I can say the monthly chart does not look good, but I can also say we have major support. If you look at the RSI on the monthly chart and you draw a line at around 42, 43 on the RSI, RSI, you can see that if we were to go downwards more in Bitcoin, we would reach a very major support zone on the RSI that would very well lead to a bounce. So yes, I don't think the monthly chart looks strong, but I also don't think it looks fragile. I think there's a very big difference in the definition of those words, between weak and fragile. I don't think we look fragile in the sense that we can take massive hits here. We can go downwards on the monthly chart, we can bounce and come back. This rejection, in my opinion, does not mean the end of the world on the monthly chart, not at all. So that's my opinion on kind of the monthly chart. If we're going back into Bitcoin, we want to get into short term. I do have a lot of short term analysis to do, and I actually want to draw you up a chart. If we're looking at what's going on in Bitcoin, we have this overall larger descending wedge formation. That is correct. But what about on a more in-depth level? Because this is the last 3 months. That's actually a very diluted view of what's going on in Bitcoin. And so we can zoom in and see where we're going to go within this wedge and get an idea of which way the wedge is actually going to break. Now, obviously, the fact that it is a wedge means it's more likely to break to the upside. That's a given. But, what about short-term analysis? Well, I can bring up a fresh short-term chart. I'll bring up the 15-minute chart here. Before we get into it, I'm going to actually zoom out to the daily chart, and I'll draw in the descending wedge just so we have a point of reference. The descending wedge looks something like this. All right, something like that. That's the descending wedge formation. Let's go back to the 15-minute chart and draw in the short-term TA freehand. Now that we've got this larger wedge in, we can get pretty well into it. So what is going on with short-term? Well, just from looking at this chart for like 2 seconds, I can already see a structure forming here. I can see a support line over here on Bitcoin, and we can probably extend that back and see that it will do something like this. Okay, that's the support line, and we've got a resistance line forming a nice little triangle formation there on Bitcoin in the short term. Where is our resistance? Well, if we're looking back at where the support levels were, we had support over here, we had support over here. So we probably have a horizontal support line in that price region. Let's go ahead and draw something in and try and line it up as well as we possibly can here. Something like that would be the support line at the top, the resistance line resistance line, not support line. We then have resistance at the top of the range, which lines up with resistance we saw in the peak of this local range over here back in the start of June. We then have some support, I'm guessing, coming from the peak of this smaller local lower range over here around June 6th, somewhere around there, probably another layered support zone over here somewhere. The fact of the matter is, what are we in? What's the critical structure? Well, it's a triangle formation. Within the larger wedge, we have a triangle formation. If the RSI validates that triangle formation, which I suspect it will, and as I'm seeing here, it probably does, we've got a support line there on the RSI as well, which validates the uptrending support in the price chart, and we've got a resistance line here on the RSI, which validates the downtrending line in the price chart. We can see that both the RSI on the 15-minute chart and the 15-minute chart price line are in a triangle formation. Now, what kind of triangle is that? I would say that is a symmetrical triangle formation. Now, the thing with symmetrical triangle formations is they generally break out, right, to the direction of which we entered them. We did enter this one from a downside, although it wasn't a considerably large entry from a downside, so it does add an element of doubt. But based on that, it is technically a bullish symmetrical triangle formation, and so we can technically expect, now this is very loose and this is very vague analysis, and realistically you probably wait for the confirmation via a breakout up or down and a breakout of the RSI up or down rather than predict something like this, because there's not enough data to really support it. But based on the limited predictions we can make, it's probably 60 or 70% likely to break to the upside. And then we have targets here at these red lines, and ultimately the final target is the top of the wedge formation. And from there, we can look for a potential break to the upside of the wedge formation. Now, when would this kind of thing occur? Well, if we flip back to the 15-minute chart, we can get an idea of when that apex is coming up. The apex of that shorter-term triangle formation is coming up around the 10th of June, which is tomorrow, okay? Tomorrow or the day after, basically, we'll be seeing a breakout of this smaller triangle formation. Now, this is where I go into the next topic of the video because it's a good time to do it. It's a good segue. As I said, we'll see a breakout of this smaller triangle formation and start to move within the larger descending wedge formation by the end of tomorrow, most likely, and then we'll have some time to kind of scuttle around in between the wedge before the big stuff later this week. What am I referencing there? I am referencing CPI, okay, and I'm referencing FOMC, both of which are in 5 days. So I'm suspecting that we'll see some more consolidation, a breakout, either upside or downside, most likely upside, scuttling around within the wedge, and then consolidation, boring stuff. And then 5 days from now, when we see FOMC and CPI, that is when we will see, in my opinion, the break either up or down from this descending wedge formation. I suspect that break will be to the upside, okay? Obviously, that's not certain, and it doesn't need to happen. And my predictions, guys, are based on the 4-year cycle theory. The 4-year cycle theory simply states at this point in the cycle that we can do anything we want other than go down below 15k. So certainly it wouldn't destroy my predictive basis at all if we went downwards, but I just don't think it's likely given the charting structure right now. I actually think the short term, the descending wedge formation is likely to break to the upside. But basically, 5 days from now, I've got FOMC and we've got CPI, and those things will be very important in giving us the volatility we need to break that wedge to the upside of a downside. I believe we will be seeing a break of the upside downside wedge. Believe we were seeing a break of the descending wedge, that we've been having for 3 months within 5 days when that CPI and FOMC decisions happen on the same day. What is the deal with CPI? And this is segueing into yet again another topic. What is the deal with CPI? FOMC. Well, we've got a 74% chance at this point in time, and again, these probabilities can shift, but the market is saying there's a 74% chance we actually see the peak of rates. No more rate hikes. There's a 74% chance we see no more rate hikes, 0% basis point hike or decrease, which means, guys, that the market, in terms of rates, is likely topped out. Now, this could not be the case, but even if we did see one more 25 basis point hike, it's very likely that the next one wouldn't occur, right? So either we're seeing the last hikes or we're going to see one more 25 basis point hike. The point is interest rates have peaked. Now, this is good for the markets. It's good for the markets because generally speaking, when interest rates peak and start to decrease, which hasn't quite happened yet, but it's getting there, that's when the S&P really starts to bottom out. Now, the S&P is not even in a bloody downwards trend right now, okay? Yeah, larger term it is, very large term, but overall, it's actually been in an uptrend for 8 months. So, I think a lot of people have just assumed that the S&P is going to drop endlessly and it's recession, blah, blah, blah. But realistically, what does the data suggest? Well, what does the price suggest, I should say? Well, the price is saying we've been bottomed out for 8 months. We've just broken the descending wedge to the upside, and we're breaking past massive resistance, including the POC, which is the major resistance zone in the volume that we've been seeing since like 2021. We've broken that to the upside as well, very clearly, and we've held that for support. And we're about, 5, 6, 7, 8% above that right now. So I don't think traditional market charts are actually as bearish as people think. And one of the reasons for this is because I believe that the traditional markets could be taking into account what the future holds. I believe traditional markets might be pumping because they are relatively confident in the fact that maybe speculatively, the Fed could be re-entering QT, right? Quantitative easing, printing money sooner than expected, right? And that would explain why rates have topped much sooner than previously expected, like something 6 months ago. Okay? It would explain that, right? We've also got the debt ceiling being suspended until 2025. We're seeing the US government take out hundreds of billions of dollars in debt in the first 24 hours of a debt ceiling being suspended. The US economy is in shambles. I don't want to talk about that too much because I just don't trust the platform. But the fact of the matter is, I don't think prices in traditional markets are necessarily as doomed as people believe them to be. And that's probably due to the fact that the economy is probably more doomed than people believe it to be. And so in order to, kick the can down the road, the Fed will do what they've always done and probably print money. Now, that's speculative and it's not based on any data. It's just my personal opinion. And it might shift. But that's what I'm seeing at this point in time. And I think a lot of people would agree with me in that regard, right? They're not going to let the economy slowly die from the effects of high interest rates, right? When they do what they've always done, right? When they're kicking the can down the road with debt, why won't they kick the can down the road with rates and interest and inflation, right? It doesn't make sense for them not to do it. If that's their mindset towards debt, why would that not be their mindset towards interest rates and inflation? Now, also, I believe that the Federal Reserve and the US economy in general, and the US in general, has a kind of abandoned ship maneuver that they are planning in regards to central bank digital currencies. I don't want to talk about that at all on YouTube, but just know that that is there. So if there is a worst case scenario, if something does happen to the US dollar, they do have an option to abandon ship. And yes, there would be turmoil involved in that, but they can definitely utilize the media and utilize their authority and their power and their influence to capitalize on that turmoil. I believe that wholeheartedly, but I'm saying too much on this platform. I'll tell you that right now, but I'm not going to speak about anymore. I do want to talk about one more thing. And again, this is something I really can't talk about in the platform, but I do want to talk about this. Now, this is not a confirmed source at all, but there is speculation that there is, I don't know if they're false, I don't know if they're true, I'm not saying anything, but there is news that Gary Gensler, the SEC, has kind of been manipulating the market, and also insider trading. Well, I guess you could call it insider trading to a certain extent. I mean, he's acting on information that he's part of, right? He's heavily involved in the SEC's case against Binance, and he's also taking Bitcoin shorts at the same time. If allegedly, okay, keyword allegedly, but that's very interesting to see. I mean, I thought I'd mention that, but obviously in Binance versus SEC, it's obviously interesting. Now, we haven't actually seen, what's interesting as well is we haven't seen massive amounts of people withdraw their assets from Binance even during this period of time. So, the price is jumping around quite a lot the last 3 days, but the reason why it's not dumping is because even though this is all going on, we actually haven't seen people act on the information. There's no massive withdrawals going on from Binance Exchange or Coinbase. So it's just kind of all words. It's just all words, and there's not really any real fundamental effects at this point in time. There are policies that are being passed in places like the UK and Canada and Australia where banks are starting to limit monthly deposits into cryptocurrency exchanges. That is major, and that's something I'm not even going to try to talk about on YouTube. That's terrible news, and I did a community post vaguely related to the topic. You guys can look at that yourself. Yes, there is policy going through, but ultimately, it is very important to note, guys, that the vast majority of cryptocurrency is held by the USA, people within the USA. Around 75% of cryptocurrency, total cryptocurrency market cap, 75%-ish. Is held by people within the United States. Another 12 or 13% is held by people in Virgin Islands, right? So the happenings in Australia, the UK, and Canada aren't necessarily major for the price of cryptocurrency. Yes, they are terrible from an individual perspective, and they aren't great, and they aren't bullish or anything like that, but they do, in fact, kind of enforce the bullish case to the people who have the maneuverability to get around problems like that and get around a policy like that. Again, I'm not saying anything. I don't want to talk about this anymore. It's too risky, but just wanted to point that out as well. So overall, guys, 5 days until the big stuff, FOMC and CPI in 5 days. That's when the big real volatility is going to happen. I think I gave you a good breakdown of the medium term, of the short term, of even the monthly chart and what's going on fundamentally. So without further ado, I'll end the video there. I do want you to stick around for the advertisements though. Please do. First and foremost, guys, we have the VIP group, VIP information group. You can find and join for free in the description below. It shows the results in PDF form for our trades and also the prices and subscription details for VIP membership. Check it all out. If you want to trade altcoins with me in Telegram, you want to make money on altcoins, that's the way you can do it. Bitget exchange, guys, this is a decentralized exchange or largely decentralized exchange in which you can do non-KYC, all right, 5 times lower fees than Binance. Very important stuff there as well. Protection fund, reserve information's release. If you sign up using my exclusive referral link, you'll get a 15% trading fee discount as well as a reward center access for over 5,000 USD in rewards, 5,027 USDT in rewards in that reward center. My referral link in the description below, best way you can help yourself and become a better trader using a better exchange and also help the channel. On top of this, if you want to become a trader yourself in terms of analyzing charts, in terms of taking trades, finding trades, how to analyze charts, how to analyze market patterns, indicators, etc., the Become a Trader 10-unit course, Crypto Academy, is the way you can do it. All the information is on the website, including our contact details via email if you want to make a payment or inquire with further questions. Thank you guys for watching the video. I hope you enjoyed it, and I'll catch you in the next one.